Good morning, everyone. How are you all? Yeah, this is Naveen Gorky Kamaraj. So, very nice to meet you all today again. So, today in this webinar, we are going to have an eye-opener session on the commodities trading in MCX. So, let's get started. Knowledge is power, of course. This trading video is for educational purposes only, and we are sharing our experiences so that you can understand in a better way. Now, every day, active traders, they trade in equity and commodities market. And as we all know, equity is stock market, which is related to the companies and the dividends and all those stuff. So many of us in the initial stage, we had a lot of questions like, what is a commodity? What is MCX? How to get started with trading in MCX? How much capital do I need? What are all the various different commodities under MCX? And which commodities to select and trade? And what are all the different factors to be known before trading in the MCX or commodity segments? So these are all just a few questions that most of us had in the initial stages. So this webinar will be an eye-opener, and it helps to understand these questions and much more. So what is a commodity? Well, commodity is it's basically a good. It is a raw material which has some economic value, and it is used as input for the production of other goods and services. Let me say it again. A commodity is basically it's a goods item, and it has some economic value, and it's a raw material which is used as input in the production of other goods and services. This is what we call as a commodity. Fine. Commodities can be of different quality, different grades, and all those stuff. So that's the reason exchanges have been brought in. So when commodity is traded in an exchange, there is a specified minimum standard, which is also called as the grade, so which is maintained, which is uniform throughout all the exchanges in the world. Okay, so this is how commodities are traded in exchanges, by having certain specified minimum standards. Okay, now there are two types of trades. One is called as you can buy and sell in spot market or cash, or also you can do it as derivatives, which is like futures and options. So what is spot market and what is derivatives? Like spot market is, I'll explain this now. Spot market is immediately you have to trade. Derivatives is like there is a set aside date in a future date at which you will have to close the trade at an agreed price. So this is like it's helping to have a fixed rate in the future. So there are two types. One is spot market and the other one is derivatives, which is futures and options. So I'll explain all these much more. Now, what is a commodity? If you see, we have air, the air that we breathe, sunlight. So these are all currently not commodities because there is no economic value for these items. So these are not commodities. But if you take the example of, say, like rice, wheat, meat, or gold, silver, or whatever, crude oil or gas, these are all commodities because these are having some economic value, and these are used as raw materials for making other goods and services. So these are commodities. So I've given you examples of what is a commodity and what is not a commodity. Okay. Now, like I said, we are going to talk about MCX. So there are many exchanges all over the world. Even in India, there are many exchanges. But we are going to talk about MCX. So MCX is Multi-Commodity Exchange of India Limited. It is a state-of-the-art commodity derivatives exchange. It facilitates online trading of commodity derivatives like futures and options. They can be bought and sold. So if you see this clearly, MCX is based on derivatives. It's not spot. Okay. So you'll have to trade with only futures and options. Now, why we are talking about MCX? MCX, it was established in the year 2003 and it is based in Mumbai, India. So currently MCX is being regulated by SEBI. So MCX, as of June 2020, the market share of MCX is 96.71 percentage. So this is massive. I have some issue in my video, so I'm not able to show my video today. So my video will be not there for today's session. Some technical issue. It's okay. I don't want to stop for the video issue. No issues. Without my video, we can proceed today's webinar. Okay. So now, what is MCX? MCX is an exchange which is based in India, which enables transactions of trading commodity derivatives. Okay, and it's having a huge market share of 96.71% in India. All right, now I've been talking about so many different things about MCX. So, like we are talking about different varieties of commodities that are traded in the MCX. First of all, we have the base metals, then we have the precious metals, and then we have the energy segment. So base metals, it's like aluminium, copper, lead, nickel, and zinc. And precious materials is basically gold and silver, and they are available in different forms. Mini, guinea, petal, or mega. There are different sizes. Basically, these are all different sizes. We'll get into the lot size in the coming screens. And also we have the energy segment, which is crude oil and natural gas. So basically, there are three varieties of commodities that are traded in MCX: base metals, precious metals, and energy. Okay. Now, MCX has a different trading hours compared to equity. Equity, we have it from like 9:15 to 3:30 every day from Monday to Friday, and on some special days as well. But MCX, we have a wider time frame for trading. It starts from 9 a.m. in the morning and it goes up to 11:30 p.m. normally. And also for like 5-6 months, we get extra half an hour because of the daylight saving settings in the global markets. So sometimes we have like 11:30 and also 11:55 p.m. So this is about MCX, which is the basic for commodities trading. Okay. Now I've been telling about so many things like different terminologies. So what are these? See, exchange. Actually, exchange is a legal entity. It determines and enforces procedures for trading the commodities in the derivatives of commodities in a proper way, because it protects the buyer and the seller, and it's a legal entity, and also it enforces everything is done on time. The best part about exchanges, now things are electronic, which means everybody is anonymous. All the prices are fair and unbiased, and settlement or selling and buying, these are all enforced by the exchange. So it protects the interests of both the buyer and the seller. So exchange, it is a legal entity, and this is where the buying and selling happens. And also they have some standard procedures for trading. Okay. Now, what is cash? Like cash is like when a commodity is up for immediate trade, like you go buy now and sell now, somebody buys and somebody sells, the transaction is done, and immediately there is a delivery. This is called as cash or spot. But we have something else called as derivatives. See, derivatives are like for these are basically about future. So it is like without in the cash segment, usually the product, the raw material, the commodity is available with the seller at the time. So it's available instantly. But in the case of derivatives, it's not like that. Usually there is an expiry date or it's a contract for a future day. So what happens is the buyer, he buys the contract so that he has the right to buy it for a certain price on a future day. This we call as derivatives. Derivatives were basically like in India, it was like in 1960 when there was a huge, in 1952, India, we started this derivative segments. But unfortunately, in 1960, there was a lot of famine and it was a very tough situation. So what happened was, because of the derivatives, like the prices were all in a fixed scenario ahead of them. So derivatives help to uh, fix the future price. So this enables the seller to produce the product, and he upfront he knows the price at which he's going to sell. Basically, it's like a bill, and you don't need to possess the commodity. If you have the bill, you can resell it to somebody else. The buyer, he can resell it to somebody else. So that's the advantage of derivatives. Okay. Now, in derivatives, there are two things. One is called as future, other is called as option. Okay. Futures. What is futures? A futures contract is an agreement to buy or sell a predetermined amount of commodity at a specific price and on a specific date. It's a future date. So it's very clearly saying that I'm going to buy this commodity, this quantity, this grade at this price on this date. This is what we call as a future contract. So everything is clear. What price, what is the grade, what is the quantity, and which date you are going to buy. This is what we call as future. So this has to be honored clearly. It's everything is predetermined. This is what we call as futures. Okay. Now, coming to the next one, we have something called as options. See, in the case of options, it's a right to buy or sell the underlying security, and it's also having the prefix price. Like there is a strike price which will be honored on a specific day, which is the expiry date. So you would have seen the different expiry dates, the PE, CE, and all those stuff on the striking price. What it means is it's just the rights and it's not an obligation. So options is basically like an insurance. So options, futures and options, there is a different scenario. Options is like insurance, and it helps that if things go this way, you get it. If not, you lose the portion of it. So that's why we call them as options. Now, we have something called as lot size. See, in spot cash or even in equity, you would have seen like you can buy like 1 quantity, 3 quantity, 5 quantity, 10 quantity, 1,000 quantity, 5,000 quantity, 20,000 quantity. These are all allowed. You can select 15 or 17, whatever. But here in commodities or in future segment or the derivatives, what we do is we have something called as lot. For example, here, a gold future contract is the lot size is 1 kilogram. But if you're taking the case of gold mini, the lot size is 100 grams. So what way this lot size matters? See, the lot size, it means because the value of the commodity varies by the lot size, and you can trade in different lot size and different quantities. So you should be very specifically aware of the different lot sizes for the various commodities you're going to trade, because you cannot trade on a gold with a less margin money. You need more margin money, and there is more risk and reward if you're going for gold futures rather than gold mini. Okay. Now, I was talking about margin. What is margin needed? See, margin is like you have been using, I believe, equity, so you know what is the margin needed. So it is the minimum amount of capital that is needed to trade. For example, if you're buying spot, say if you're buying 1 kg gold spot, you'll have to pay the full money and take the physical commodity with you. This is spot. But in the case of derivatives, it is a future. There is a future expiry date. So physically, you're not going to take the commodity with you. Also, you can resell it or exchange it with other buyers. So here in this case, like for 20% example, for 20% of the money needed, you can buy and hold a derivatives contract till the date of expiry. So what it helps us is, for example, say like currently the gold is like around 60,000, 56,000, whatever. What we say is, if you're going for spot, you'll have to spend the full money. 56,000. You'll have to say and pay and then get the product and hold it with you. But if you're going for a derivatives segment, you can hold it till the expiry date, or if you're going to pay like 10 to 20% of the value for the lot. So this way, for minimum investment, you'll be able to hold a bigger size, and also you have higher risk and reward ratio. Like for example, for 10,000, if you're going to buy for a spot, you have limited profit or loss scenario. But in the case of derivatives, where you are using a margin of like 10 to 20%, you get 5 times more risk and reward ratio. That is, if you have like 2,000 reals capital, what you purchase with 10,000 in spot, you can buy and hold till the expiry date. So this way, this is what we call as margin. Okay. I just wanted to explain this terminology so that you are aware of what we are talking about. If you have any questions, please ask me. I will reply you at the end of this webinar. Okay, now, see, we are talking about commodities and trading. See, today there are so many factors affecting commodities. Like we have a lot of international markets. There are more than 50 different commodities markets in the world, and the prices are all interlinked. For example, if you're going to take for gold, UK-based LBMA, they are the major factors of pricing in gold. So every day they are giving the prices 2 times. So accordingly, the prices are in US dollars. So and accordingly, the global markets like the US market, the Japanese market, the Korean market, these are all linked up. So based on these linked up international markets and the currency fluctuation in India, because the exchange rates keep varying, the prices of commodities keep changing. Not only these, we have so many other factors like economically, if you have a better GDP, if there is a good industrial growth, definitely there is a huge demand for commodities, because these are all consumables which are used. And there is a bullish case in this scenario. If there is a higher GDP, there is definitely a bullish scenario. And if suppose we are going for a financial crisis or recession, and even if there is inflation, all these factors, they have direct affecting the commodities prices. Now, not only the economic factors, we also have some specific events, like, for example, for one construction, for one commodity, if there is a new production line or production facility, massive structure that has been built for producing and supplying a certain commodity, that is also going to affect. And also if there is a new technology, or if maybe, for example, they have a commodity is used in a new requirement, or if the commodity is discontinued, or if some calamities happen, like, for example, some mine blast or some plant had some issues, like, so there is some disruption of supply. These all affect the particular commodities prices. Basically, it's the demand and supply. When there is more demand, it's bullish. When there is very less demand, it is bearish. And also we have the certain government trade policies, because government can produce the gold. The whole world is depending on different policies, so they can have different policies which will affect us. If something happens in the US or China or in the UK, it is going to affect us, because we are going to import the product, the commodity, from outside. So definitely, whatever price change because of the government trade policies in India or outside, it is also going to affect us. So, and finally, we have the geopolitical events like war or unrest or many other stuff. These are all going to affect the commodities prices in real time. So we know that commodities price keep changing very drastically in a fast way. And why do these change? These are all the factors that are affecting the prices of commodities. Now, I just want you to be aware of this so that you know why the price of commodity keeps changing. Because the price of commodities is not like stock market. There is a difference. Because stock market is depending on a particular company and its progress and its growth and all that. But commodities, it's not like that. It's global, and it's consumable. So the trading of commodities has more factors affecting it compared to stock, and it's in a different way. Okay, now see, we have been talking about MCX trading. So many of us have this question, like, how do I get started with commodities trading in MCX? I'll just give you an outline. For example, first of all, you need a trading account. You need a trading account open so that you can trade in the commodity sectors. So you need some capital money for margin. Like I showed you, you need a margin to buy any derivative, buy or sell any derivative. For example, I have shown you the different margin needed for various commodities in Alice Blue platform. So you have two prices displayed there. One is for the bracket order, and the second is for the cover order. For example, if you see here, if you have 4,200 rupees, you can trade aluminium one lot. And if you have 2,500, you can trade aluminium one lot in bracket order, which means bracket order is where you have both the entry and the, you have the entry, target, and the stop loss. So for 2,500 rupees, you can trade aluminium one lot, and for 4,200 rupees, you can trade copper. Likewise, you have all the prices over there. So this is the margin you will need. For example, you need around 4,900 rupees for trading one lot of crude oil. This is all about intraday. These are all not for holdings. The prices are all for intraday, MIS intraday tradings. Okay. Now, so you need such a capital money. For example, if you need to trade like 10 lots of crude oil, you need around 50,000 rupees in your trading account. So this is about margin needed. Now, what will I get if I'm spending 50,000? If I am investing 50,000 rupees, what will I get? See, for this, you need to know two important things. First of all, what is the profit and loss for 1 point movement? For example, crude oil, for future, if there is 1 point movement, the price of the value in Indian rupees is, for profit or loss, is 100 rupees. For example, if it moves up, you bought crude oil and the price moves up by 1 point, you gain 100 rupees. For 1 point, it's 100 rupees. If it is 10 points, it is 1,000 rupees. If it is 60 points, it is 6,000 rupees. Similarly, for gold, for 1 point movement, it is 100 rupees. For gold M, it is 10 rupees. For silver M, it is 5 rupees. For natural gas, it is 1,250 rupees per point. So you should be aware of these single point movement, profit and loss. What can be the price? Because this is your risk management. So you should be aware of what will be the maximum loss you will face and what will be the potential possible profit you will get. It's a controlled environment where you know what is the possible price movement which will give you, like 5 points will give me 500 rupees. Or in the case of natural gas, 5 points will give me like 6,250 rupees. So you should be aware of the profit and loss per 1 point movement. So this is 1 point. And also there are expenses. Like to arrive at the break-even price, you should know what is the brokerage you are paying, what are the other charges and taxes for each lot. You should know these so that you can come at a calculation. Like, for example, for crude oil, the brokerage charges, taxes, and all blah 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 comes to 150 rupees per lot, which is like 1.5 points. So if you buy at say 3,150, for example, I'm talking about yesterday's price, so 3,150, and if the price goes to 3,155, you have around 3.5 points profit, other than the expenses. So you should be aware of it this way. Same way, if you're going to sell at 3,150, and if the price goes to say 3,140, you get 8.5 points profit, which is like 850 rupees profit. So likewise, you should know the break-even price for each trade. And also, you need to know when to enter a trade and when to exit a trade, because this is very crucial. It's your capital, your money, and you have to protect your capital and trade in the right way. So you can join our premium group and be part of our guidance and support, and you know when to enter a trade and when to exit a trade. We also give continuous training sessions on webinars every week, and some of them are available on YouTube as well. Please watch these webinars and YouTube videos so that you understand how to enter a trade and how to exit a trade. We are giving technical analysis, uh, different indicators, different strategies. We have been explaining all these for your benefits so that you know, or at least you understand in a better way than what you were initially. So myself and my father, Mr. Kamaraj, we have been sharing our experiences. Like my father has been trading for the last 30, 40 years, you can say. And of course, he lost some huge amount of money in the initial days. And anything to learn, you need to spend time and money, of course. So now over the period of all these years, so we have been sharing our experiences of success and failures so that the people or the members who are watching us, they can protect their capital and start earning money. So join our premium groups. If you have not yet joined, join us, and then you can follow our guidelines and our different training webinars, and also we provide support to you when you need for buy and sell guidelines. Okay. Now, this is how you get started with MCX trading. First of all, you need to open a trading account. If you don't have a trading account, or if you want a trading account with less expenses, you can reach out to us and we will provide you account opening facilities in Alice Blue, and it will be through our referral. And if you have opened the account through our referral, you get our guidance and support for free as long as you are trading in that Alice Blue account. And while you are going to trade, you should know how much capital is needed. Like, for example, if you have around 50,000 or 100,000, or 50,000 rupees or 1 lakh rupees, it will be good enough to start trading and making money for your living. So you can even start with 20,000 rupees, but that's okay. That's not going to give you big money. So if you're going to trade with say 100,000, around 3% per day of trading, on average, you can make profit if you are going to follow our rules and instructions on time. So we tell you how to put stop loss, when to entry, when to exit, how to adjust the stop loss. All these factors we train and guide you. So it is your capital, and you have to be more vigilant and aware, and you have to follow these basic rules. It's not something complicated. It's just the basic rules that will help and guide you to protect your capital first and then multiply the capital. So normally we have cases like 2 to 3% on an average per day. This is how you multiply your money. For doing this, you should have these basics. For MCX trading, open the trading account through us if you don't have. Arrange the capital money and fund it, and you should know the profit and loss for each point movement, and you should know the break-even price as well. And you should know when to enter and exit a trade. For this, you can be part of our premium group, and you can learn the various ways you can enter and exit the trade. We share all our experiences, both success and failure, to you. Okay. Now, we have been talking about MCX, commodities, and all these stuff. Now, I just want to summarize these important points so that you are aware and clear. Number one, commodities are highly volatile. Okay. Always they should be traded with stop loss. If you are trading without stop loss, it's a total uncontrolled environment, and there is a huge potential of losing your capital, a huge portion of your capital. Please always trade with stop loss. Okay. Second, when you're trading in commodities, you should be aware of the different commodities exchanges in the world and when they are operating, because when the exchange opens for the day, there will be more buyers and sellers and more volume of trade. So you should be aware of the different major commodities exchanges and when they are operating in Indian time. Now, you should also be aware of the market news, because we have something called a sentiment analysis. So this is very crucial in identifying what is going on, what is the sentiment in the market. So you should be aware of market news always. All right. Then inventory levels. These are very crucial, because if there is huge inventory, the demand is less. If the inventory is going down, there is more demand, or the supply is less, which means the price goes up. So you should always be aware of the inventory level. So you can check out all these things. Everything is available online. Just be aware of reading and understanding all this stuff, you can select one or two commodities and you can be aware of it. To be a trader, you should learn, you should read, you should understand, you should experiment, you should backtest, you should continuously be on the field to be a trader and make money. All right. So this is one thing. Then, like I said earlier, you should be aware of how to know what is the margin needed for a MIS bracket order or cover order for the intraday, and also you should need you need to know the margins if you are going to hold till the expiry date. For that, also you need to know, and you should know the break-even price for each trade, and you should know the different trading hours for particularly for India, because we have two timings: 9 to 11:30 and 9 to 11:55. You should be aware of this, because when you are holding a trade, you should know when there is a time for auto square off, because if it squares off by itself, there is a charge. Any brokerage firm makes a charge. So you should be aware of all these things so that you protect your money and avoid unexpected expenses. All right. So I think that's it about trading in MCX. And in the coming weeks, actually today's webinar is just an eye-opener for commodities trading, MCX, in MCX. In the coming weeks, we'll be getting more in-depth, but today's webinar is the foundation so that you understand what is a commodity, what is the commodities exchange, and what is derivatives, what is future, what is options, what is lot size, what is margin needed, and how much capital needed to start. And the basics, today is the basics, and in the coming weeks, we will have more advanced or more in-depth insights on or webinars on the different commodities, how you can trade, particularly crude oil, or you're going to trade like gold and silver, or you're going to trade with copper, zinc, aluminum, nickel, whatever. There are, these are all not same. Each one has unique characteristics, and from the live data feed and analysis based on Mr. Kamaraj's experience and guidelines, we are able to predict, and also we are able to study and analyze the various commodities patterns in a better way. So we'll be sharing our experiences and different strategies in the coming weeks. So these are all the upcoming webinars, and also we'll be having the Fibonacci series and the technical analysis series. We'll be having the ATR, Super Trend, and all those technical analysis based trading series strategies. And most importantly, the psychology of trading, which is very, very, very important. I wanted to say this today because I have many members who are still not clear about the psychology of trading. See, I have three problems. Number one, fear. Number two, greed. Number three, frustration. See, these are not going to help you. You should have an emotional balance, and that's how you can ride the wave and make money. So fear and greed and frustration are not going to help you at all. So there are ways how you can overcome such anxiety and you can be a disciplined trader. So we will see all those things in the coming weeks. Okay. So now every weekend we'll have webinars, and we want you to join us and learn and understand and get into more details about different trading strategies and stuff. Okay. Now, you have any questions, you can please post on this Q&A session. I'll get back to you. Okay. Now, first question. I lost 35 lakhs money. How to recover this 35 lakhs lost? And what is the capital required to start again? So this is the question. Any other questions, you please post it. We will discuss. Okay. All right. Now, you lost 35 lakhs money. Okay. How did you do this? Do you have previous technical analysis experience? Have you done this? Do you know what is MACD? What is RSI? What is ADX? What is moving average? What are all the different parameters and how they will affect reading a candle chart? What are the different patterns? Do you know these things? If not, see, losing 35 lakhs money is huge, because earning money is not easy and saving money is much more difficult. See, I really feel bad because you lost 35 lakhs money, but be positive and you can definitely take back this capital back. Whatever you lost, you can take it back definitely. What you have to do is, uh, first of all, you have to understand the basics of technical analysis because blindly listening to somebody else and trading is not a trader. That any I don't want to say anyone can do that. But to be a successful trader, you yourself have to have some basic knowledge. Once you have this basic knowledge, definitely you can make money. You can retrieve this 35 lakhs and you can make money in crores. All right. And for the capital required to start again, you can chat with me on WhatsApp. I'll guide you back. Okay. Now, next question: which time frame is good for intraday trading? Uh, okay, for gold and silver. See, like as I told you, you should be aware of the different global commodities markets operating timings. Particularly, you should be aware of Japanese, Korean, and European. Also, Chinese. Shanghai, you should know about Shanghai and Guangzhou, both should be there. And also, you should be aware of European market and then US market. Why I'm saying this is these are the different major players. These players, they have huge volume of trades. So just be aware of these timings and you can do it. Normally, see, for example, we have trades starting at 9 o'clock in the morning. See, 9 o'clock, usually what happens is this is reflecting of the previous days, whatever happened in the global market. Like for example, 9 o'clock, if the Singapore market is good, we get some boost. But the previous night, if the US market is down, we have a negative impact. So this is how things work. So it's all globally interlinked. So you should know what is going on. See, the best time is highly volatile time is evenings. Evenings, it's highly volatile because the US market is open at that time, Brazil also. And the afternoons or in the noon time, you have the German or European market is open. Even UK and German, they're all open in the afternoon. So the best time will be like around 10 o'clock in the morning. You can have market movement. There'll be some movement so that you have. See, there are different timings. First of all, the market doesn't keep moving. It's not like that. There are some times when the market is trending, and there are some times when the market is sideways. You should be able to read and analyze. First of all, you should know when the market is sideways and when the market is trending. So to trade in a trending market, it's easier rather than trading in a sideways market because sideways the movement is very narrow. So you should be able to understand this. You should be able to understand this, right? If you do this, see, the timing for trades has two different scenarios. One is based on the different global markets timings, number one. Number two, this is about volume. Okay. Number two, there is sideways market and trending market. So you should be aware of this. When you see the candlestick chart, you should be able to study, okay, this is what is happening. So we can enter the trade now or better to stay away. All right. It's not just based on timings, but it's also based on the actual market movement. So morning after 10, it's a good time to trade in commodities. Then again in the afternoon, there is a time for trading because of the market opening. And also in the evenings, there is like after 4 o'clock, there is some movement. Then after 7 until like 9:30, 10 o'clock, there is huge movement. It's highly volatile. So these are the different timings I'm just telling you. So you will have to study these yourself by checking and backtesting. Okay. Now, next question. I have so many questions now. Let me. Okay, emotional tradings and emotions or enemy. Definitely, we will have this webinar in the coming weeks. I'll try to have it this month itself so that it helps our members. We want you to make money. We don't want you to lose money. We want you to protect your capital and multiply because emotions are the killers. Okay. Next question. Okay, this is a very good question. The charts of silver, silver M or silver micro. These prices on charts are same or bit different or same price. Silver is different. Silver M is different. Silver mic is different. See, all three of them are related. Yes, they are. But they are not trading in the same volume always. Based on the volume and the volatility, each of these, they have their own movements. There is a trend, but still they are not same. The price movement is like, for example, here it moves one, here it should move relatively. It's not like that. Based on the volume of buyers and sellers at that time, the trades happening there are different. So definitely, if you are seeing silver, you cannot trade silver M based on watching the silver charts or silver micro. Whatever chart you are seeing is related to that particular script. Okay. Okay. Next question about the charts. What is the time frame for trading in intraday? Yes. The question is, like, his question is, he's asking about if it should be like the chart should be 1 minute or 2 minutes or 3 minutes or 5 minutes or 10 minutes or whatever. That is his question for the candlestick. See, I've been telling this so many times and say this now also. See, 1 minute chart, you have different candlestick charts: 1 minute, 5 minutes, 3 minutes, 10 minutes, 15 minutes, 30 minutes, 1 hour, 1 day. There are so many charts. See, if you're going for 1 minute, the movement is going to be very less. Okay, the risk and reward is very less. Also, there is a lot of signals. You'll get a high quantity of signals, and some of these can be fake as well. So definitely 1 minute is not a good choice to trade commodities, because commodities are highly volatile, and definitely 1 minute is not a good choice to trade. Based on the volatility, you can select 5 minutes or 10 minutes or even 15 minutes. Sometimes when the market is slow, you can adjust accordingly. Okay. If you are going for a higher time frame, there is more risk and reward ratio for that. Based on your risk management and your capital portfolio, you can select these minutes. Okay. The higher minutes, the higher benefits and higher risk you have. Okay. Okay. Now, one question is, open account with Alice Blue through our referral, then no charges for subscription, right? Yeah. See, if you are opening Alice Blue account through our referral, you contact us and we open the account for you. We are not going to charge you anything. You will be getting our support and guidelines for free as long as you are trading in this Alice Blue account open through our referral. So we welcome you to join us. Okay. Next question. Okay, I have a very interesting question. Can we trade full-time trader without job to survive family? Well, yes. This is where we say as risk management. See, we normally people say that investors are different, traders are different, and you should not mix all this. This is all nonsense. See, first of all, to be a successful trader, you should be a disciplined trader. What is disciplined trader? You should have your own goal. Today, my maximum profit will be like, say, 5,000 rupees, and my maximum loss will be 3,000 rupees. This is your goal for the day. When one of these comes first, stop trading for the day. Do not proceed. Do not overtrade and do not panic trade or do not go for revenge trading. All these emotional nonsense is going to kill you. If you're going to be a disciplined trader, it takes some time. It takes some time, but definitely you can win. Myself, I'm doing a lot of stuff. I'm not just trading. I'm also doing other stuff. I'm just sharing my experience. But my major source of income is from trading. So I'm running my business as well as surviving by trading. This is my honest fact. And see, you should follow certain basic rules. Stick to the rules. Definitely, one day you may lose. Okay, 5 days you may lose. You have at least 20 days in a month. If you are following the rules and trading properly and not over trading and not panicking, definitely out of 20 days, 15 days, I'm saying minimum, you can make profit for sure. This is how it works. And anytime you want something, you are welcome to contact us and we'll be there to guide you. And there is one more point which I was telling, like investor and trader. See, how we say our members to be more strong and active in trading is, see, for example, if you have a capital of 100,000, 1 lakh Indian money, and you want to make a profit of 5,000 rupees per day, example, what we suggest and recommend our people is, we suggest our members some stocks to buy and hold. For example, you can reach us and we'll tell you for 1 lakh what stocks you can buy and hold. then what we say is these stocks are prone to appreciate and go in the positive direction, which means you will get benefits out of these stocks. Then also we say that, see, if you have one lakh money stocks in your account, you can trade for like say 20,000 rupees. So this is where you should play. You should not put all the 1 lakh rupees in trade, and you should not trade like that. See, if you're going to use 20,000 rupees, you can trade 4 lots of crude oil, right? 4 lots of crude oil. If you are just going to make 10 rupees profit, 10 points profit, that will be like you're going to make around 3,400 rupees. 2 trades, you get your profit. You get your goal. So this is the way it should be. You get my point? You should be an investor basically, and you should play with 20% of your investment. This way, you are more confident and you are more strong, and you will be able to be in a confident player. Okay, this is the way to be a full-time trader without job and to survive the family. You will be in a more positive situation. Okay, next question. Yes. Okay. Please also cover the fundamentals of commodities. Like if you take an example of crude, when the inventory ration release. Okay, like Wednesdays and Thursdays for natural gas and crude oil, you have the inventories. And about the fundamentals and each commodity, we will do it in the coming webinars, because we need more time to focus on each of these commodities individually. Okay. Inventory for crude, actual data and forecast data. Based on that data, how do we take the position? This is the next question. See, basically, it's about demand and supply. If there is more demand, the market is bullish. If the demand is less, the market is bearish. So this is the basic. You can combine with moving averages, and you can combine with chart patterns, and you can also see the moving MACD, the convergence and divergence, and you can come to one conclusion. Yes, fine, this is what is happening, and this is what is going to be predicted. So you can mix all these data, and you can go ahead to take a position. Okay. London Merchandise Exchange. LME is for London Merchandise. Yes, LME is for London Merchandise Exchange. So most of the commodities is basically from the UK. So we have to be more careful about these markets, and accordingly we have to be aware of what's going on. Website you recommend. See, just you can go to the investing.com, you can go to Money Control, and these two are good enough because you get a lot of information and insights on the various platforms and markets. All right. And any more questions? Okay. I have a recommendation. Forex Factory is good for all the data, but I have not seen it. Let me check it out. Yeah. Next question. The question is, why gold and silver prices are highly volatile now? See, if you have seen in the last 2-3 weeks, the prices of gold and silver have been highly volatile, right? The reason is, see, normally there is a proportion. If the US dollar, it's inverse proportion, US dollar versus commodities. If the US dollar is strong, commodities are weak, particularly gold. If the US dollar is weak, commodities are strong. This is what is normally happening, because commodities were actually designed to be as a hedging tool for the forex and stock market. This was the original idea and plan. But what happened was, now currently after this COVID scenario, things are crazy, because the demand and supply is totally unpredictable. So we remember the crude oil prices went up to 800 rupees. It was a crash, and the Brent went in negative. So things were out of control. So this is where there is a huge demand and supply change. So these changes are affecting gold and silver because these are consumables, and there is a requirement and demand. So accordingly, the prices are going up. It's a global scenario which cannot be controlled by any one particular thing. Okay. So I want to get started with commodities. What should I do? Fine. If you want to get started with commodities, just reach out to us. You can reach out to me by WhatsApp. So I'll give you the recommendations and guidelines of based on your capital, what commodities you can trade, and how many quantities you can trade, and what should be your daily goals. We can give you guidelines, and accordingly you can trade. I want to open an Alice Blue. Okay, fine. So for anyone who is in need of opening account in Alice Blue, please contact me on WhatsApp. The number is posted on screen. You can contact this number, or also you can contact the number on the group so that you can reach me directly. So we will help you open your account, and you will be getting our tips and guidelines all along, as long as you're trading our tips on the Alice Blue account you open. Okay. Which is safe or low risky, commodities or NSC? Well, initial days myself, I didn't want to trade in commodities because I felt commodities was risky. This is what I felt. But nowadays, I'm more comfortable with commodities because I do both NSC and commodities. Both are okay. According to me, both are okay because, see, for me, you get more time because I get more time from 9 to 11:30. Even if suppose I make a loss, for example, I did a loss in the morning, I did something. I have time to recover. As long as it is well within my goal, I still have time to recover. So for me, trading on commodities is more safer for me because what I do is I trade like say 6 lots, 5 lots, 10 lots. Sometimes I trade like this, and I exit with minimum profit because I know my break-even point. Once it reaches, I exit from the trade. So this way, I feel I'm making more profit. Yeah. So this way, what happens is there are different strategies for trading, for safe trading, for aggressive trading. There are so many strategies. So please watch our YouTube videos, what we have posted, and also join our webinars. So we share our experience with you, and you get to know more insights. We welcome you to ask your questions so that we can guide you all. Okay. So I think that's it. And please don't forget to join the upcoming webinars because we'll be sharing more of different scenarios and experiences with you. So I think today we had a good discussion and a good webinar on commodities. It was just an eye-opener to get started into what is commodities in MCX. So in the coming days, we'll have more in-depth and insights on the different commodities and how to analyze them fundamentally, technically, and how to trade and different strategies. We'll get into all these in the coming days. So I thank you guys. So there are so many people here. I think there is one question. I want to answer this question. Will gold crash impact the market? Any idea? Thinking to buy physical gold. Is it right now? See, any physical gold is always good. The reason why is, see, paper gold is not going to help you at all, or bonds, these are not going to help you at all. Buying physical gold is always good in the global scenario. Even if the price goes down a little, gold is still gold. You're holding gold, it's a physical asset. Even if the price goes down a little, again, it has to come up. So the market is like that. If buying physical gold is always good at any time. And you can reach me out personally on my WhatsApp. So I'll guide you what to do for buying physical gold. Okay. Is it right time? I think my father, Mr. Kamaraj, is the right person to answer this question about gold. He will answer you. For me, buying gold, physical gold, is always good at any time. Whether it is 1 gram or whether it is 100 grams or whether it is 500 grams, buying gold as an asset is a good form of investment because of the liquidity. In the next minute, you can get it as cash, and also you're owning it. There is no depending on any third party. Okay, so buying physical gold is always good. And is it okay to buy now? Yes, please chat with me and my father. We'll tell you, because maybe there is like we can save a couple of hundreds or thousands. We can save. So I'll check and then guide you on that. Okay. Thank you, guys. So thanks for joining us today, and it was really nice being with you all and discussing and sharing our different experiences. And thank you all for joining us today. So I'm waiting eagerly to see you all in the next coming weeks for the different webinars. Thank you. Bye-bye.